It's been a pretty lousy week for holders of SmileDirectClub stock as price has sold off on earnings on Tuesday. Before we look at the charts, let's look at the article that talks about their earnings. Specifically, this is coming from the Motley Fool, why SmileDirectClub stock was plummeting today. So on the news, this was Tuesday, the stock was down 20%. While there were actually some mild positive within the company's profit trajectory and guidance, SmileDirect missed both revenue and profit estimates. Even more dire, the company is quickly running out of cash and has a heavy debt burden. Not good, not good. Ongoing losses and cash burn really aren't good, especially since the company only has a little less than $29 million in cash on its balance sheet, compared to debt of roughly $860 million. The company noted that the CEO has provided it with a $10 million revolving credit facility to meet its short-term capital needs as SmileDirect aims to restructure its balance sheet. We've seen several companies restructure their balance sheet, probably the biggest one being Carvana maybe 4 weeks ago. That restructuring could potentially entail a dilutive equity raise. Ooh, not bad. Not good. Very bad. To get cash and maybe pay off debt, which would be especially painful given that SmileDirect stock has plunged to just 61 cents per share, down from $23 in 2019. So this is not good. But if you had to choose between going out of business and staying in business, well, that's what the public markets are for. All right, now what? So the CEO, he forecasts the company will achieve positive adjusted earnings, EBITDA, in the third quarter and positive free cash flow in the fourth quarter. Company is also rolling out some type of AI-powered SmileMaker platform. The simple on-ramp for customers has the potential to reduce friction and get revenue going back in the right direction. So it appears that it's just a more seamless process from what you want to transaction payment. SmileDirect's aligners are a low-cost option than traditional braces. However, on average, they are $2K for these braces. All right, so let's get to the charts. Thanks for being patient. We can see from the monthly chart, prices bottom at the 40-cent level. So we'll just put a little red dash line there. All right, now we're going to go to the weekly chart. And price did stall at what was previously support. At the $1 level, round hole psychological number. And that was last week. And then coming into this week, price opened higher, only to go lower. Now, below price, I see potentially two levels of interest, but there's no volume here. Now, on a good note, you do have a bullish crossover between the 13 and the 26 simple weekly moving average. I'm going to put these in. As you potentially have a level on top of a level, which is going to strengthen that level overall, or that zone. I love level on levels. You know, this is a football lineup, offensive line, then your quarterback. So your quarterback's protected by the offensive line, meaning as price goes into the first zone, you got buyers that are going to equalize the sellers. And if price penetrates the first zone and gets into the second zone, well, then you'll have an imbalance between the buyers and sellers, potentially pushing price higher. All right, so and we're gonna remember that bullish crossover that's around at 48 cents, 50 cents, because on the daily chart we have a golden cross. That's where the 50-day crosses over to the top side of the 200. So you have a convergence of the 50, 200, and 100. So this would be a level I would think that price is going to stall. Now I wanted to look at the volume. I don't really see a lot of volume. So that takes away from the level in terms of it being a buy level. Nevertheless, if I put on some fibs, I like the 81, 88.6 retracement. Right, price has already breached the 50 and the 61.8 retracement. I love the 88.6. It's a Wall Street favorite, probably unknown to retailers. And that level coincides with the lower buy level. So here's the setup. Before first target at 80 cents. That may take some time though. You can put a stop below the low of roughly 35 cents. So you're risking roughly 10 cents to make. It's going to be about a 3-to-1 reward to risk ratio. Again, may take some time. If they can restructure their debt, that's going to be very bullish. That's going to be bullishness for the stock, although it might dilute current shareholder value. But again, it gives them a lifeline and more life support. So let's see how things pan out between now and the next earnings, which will be in November. Thanks for watching. Subscribe, please. Like the video.